Next, we are going to go into some frequently asked questions, and then we're going to go into some example. So the first question that we get is, when do the levels update? So we have different types of levels. So we have levels on stocks, ETFs, indices. Those are both end of day. The end of day data updates at around 5:30 to 6 p.m. Eastern time after the market close. But we also have intraday data available for you guys that updates 14 times per day. The first snapshot comes at 8 a.m., which is the pre-market snapshot with the updated open interest. And then we start updating the data from 9:50 onwards every 30 minutes. Futures data update once a day. We currently have end of day data on futures, but we are also going to show you in the next few slides how you can actually convert intraday data on futures. We also have our crypto data that updates at 8 p.m. Eastern. And then we have our blind spot level and swing levels that update at 11 and 6 p.m. Eastern. We're going to talk about blind spots and swing levels in a separate meeting, in a separate call. Today, we're going to focus on mostly gamma levels. All right. Second question that we get, you provide levels on ETFs and indices, but if I trade futures, why should I convert levels and how it works? This is a very great question. So the first thing that is important, again, going back to what we said at the beginning, you need to have an edge and you need to be able to access data fast to make better decisions. So here we show you the three different charts. This is the net gamma exposure chart of SPX, SPY, and ES. As you can see, they are like slightly different, right? Although they might tell you a similar picture, they're actually not exactly the same. So by looking at these three separately, this can actually give you some really good insights on where the market is moving. Even if you're trading future, you should be paying attention to what's happening with the other assets that are actually moving in the same direction. The other question that we get, why is the put support and core resistance different from SPX to ES, right? And the answer is, again, simple. SPX, SPY, and ES have three different option chains. So again, three different chains, and it's very important that you understand also the customer that is trading those assets. So if we look at SPX, we have a lot of institutional flows coming in. SPX options are cash settled. They are more normally traded in big blocks, so they are normally traded by large institutions. SPY is more of a retail product or long-term asset managers where they use SPY as a tool to invest in the market. So if you are a retailer, you would have SPY in your 401k or QQQ in your 401k. If you are like an asset manager with a long-term view, you will also hold SPY, and you might be hedging your SPY positions, not because you think the market is going to drop, but because the market, you don't want to lose your profit. So when we see like this divergence between SPY and SPX, that's also very, very important data. And again, ES, futures market maker, CTAs are using ES to trade. So again, very, very important that you understand who is the customer for this type of data. And again, by comparing levels across all of these three assets, you can actually spot hidden areas. You can confirm high conviction strikes. And again, you can detect unusual divergence. So again, we give you access to all three of these option chain. So it's up to you to use them at your advantage, but also you add the flexibility to potentially use them in conjunction. We have a good questions from Ma, which actually is very pertinent to what we are doing right now. Do JAX levels for SPX, SPY, ES have different weight? So I think SPX is by far the asset with the largest option flow. So if you are trading ES, you definitely want to look at SPX because by volume is the highest. Then you have SPY, which is also very, very high in volume, and then you have ES. So I would say very, very important that you monitor those because they have different volume and different implications. All right. So if I trade futures and I want to use intraday data, what can I do? So you can use the end of day futures levels coming from the futures option chain, but you can also do conversion, and we're going to go into conversion in a second. So if you're trading ES, you might want to monitor SPX or SPY. If you trade NQ, you might want to monitor QQQ and NDX. The reason why I put QQQ in front is because QQQ has by far more option volume than NDX, but also NDX levels are actually very, very important. You could also convert max 7. So let's say that tomorrow we have earnings, Apple, Amazon. You want to see the Apple levels on NQ because you think that that's going to have a big impact. You can also do that. Or NVIDIA, when NVIDIA reports, you could actually convert NVIDIA gamma levels onto NQ. If you trade Russell, then IWM would be your option. If you trade Dow, Dow is a very interesting one. Dow does not have any option activity, so there's no options on YM or on the futures. So what you can use is you can use the DIA, which is the ETF of the Dow Jones, or you could use our blind spots indicator on YM. If you trade Bitcoin, now we do have gamma levels on Bitcoin by looking at the Bitcoin option chain, but you could also actually convert the iShares IBIT. IBIT has a lot of option volume, so could be very, very interesting, could be very, very important. If you trade gold, then you have GLD, and if you trade crude oil, then you have USO. If you trade bonds, then you can use TLT or any of the other ETFs that are looking at bonds exposure and so on.